It's Soleil, and this is episode 640 of the Orange Pill Investor. And today I want to talk about whether the fees are the filter. And this is a pretty common argument that the core folks make. And I think this is a misunderstanding of economics and incentives and trying to boil everything down to just a dollar amount. And I was immediately reminded when I hear these arguments about the story from the book Freakonomics. And it was this daycare, and they had a problem with late pickups from the parents to the children. And they thought, okay, we'll just add a fee, right? The fee will be the filter, and we'll just charge people $5 for charging. I don't even know if it's $5, making the numbers up, but we're going to charge a small fee, and that will disincentivize late pickups. And if the fee was the filter, then the late pickups would go down. And the problem is that the late pickups doubled. And the reason is because the incentive for picking your kids up on time was because people did not want to inconvenience other people, right? That's just the wrong thing to do. And you kind of look like a shitty parent, right? Like, look, you're constantly picking your kid up late. Like, do you prioritize your kids? And so there's all of these economic incentives that are not just about money that I think the core people don't either understand or maybe don't want to. And the reason why this happened is that what people were somewhat regulating themselves with on a social level now became a legitimate use case. This was transactional, and you didn't have to be guilty anymore. You're like, oh, well, if 15 or 30 minutes late is worth $5, I'm happy to pay the $5. And so people were like, yeah, sure, $5, great, no problem, I'll pay that. And so there's some unintended consequences if you're legitimizing action. Previously, it was understood that this was unwanted behavior, and we are going to root you out, and we're going to make you uncomfortable, and we are going to try to drive you somewhere else. A better incentive probably would have been for them to say, if you pick your kids up late 3 times, you're fired, and you can go find another daycare. And people who, if this was the most convenient daycare or had the daycare with the best reputation or whatever, people would be like, oh shit, I can't screw around. These guys actually do value their time here. Probably having to pay their employees overtime or, just whatever. Probably got crying kids and shit because they want to go home. And so when you assign a monetary value to unwanted behavior, you're removing its designation as bad behavior, and you're basically calling it good behavior, and that good behavior is worth X amount of dollars. And so I think that's maybe the case that the people who say that they're against spam, but we can't stop it, and there's nothing we can do about it, and the fees of the filter, we'll just price them out with higher prices. Well, it would have to be sufficiently higher price. Like maybe if they had said if they had said it's a $500,000 to, as a 15-minute late fee, oh, of course, I'm sure that would have had a much better effect. But the problem that I've mentioned before is that that's an extortion fee, right? I don't want to have to pay a $500,000 to prevent the fee from going up from $5 to a half million. So you're basically extorting the good actors to pay a higher ransom fee to make the bad actors act right. And the other problem is that the good actors are forced to continue to pay and like continually pay higher and higher extortion fees forever. Whereas the spammer or someone trying to sabotage Bitcoin with some kind of CSAM image, they only have to pay once, right? The blocks are kind of like half empty right now. It probably wouldn't cost much. It wouldn't cost much at all for someone to get something truly objectionable on the blockchain. And it's too late to price it out at that point. The best arguments that I've heard from some guys that are kind of hammering me lately in group chats, or at least just pushing back on my BIP 110 arguments. They'll say that the NFT people and the image people are basically participating in some kind of augmented reality that the rest of us can just choose not to participate in, and they can go pretend that these ones and zeros that are not viewable on chain and become something off chain. It's kind of like none of our business, but I still think there needs to be a true incentive to make them go away completely. Because even if I acknowledge and say, okay, it's just arbitrary data, there's still a lot of it that they're using for their purposes, and I get no benefit out of it, and they're getting me to store it for free. So regardless of whether I even care about whether the image is objectionable or not, or whether people are whether I'm engaging in their fantasy world, the reality is it's on my, the arbitrary data in whatever form is on my drive, and I don't like it. And whatever I can do with consensus, and when I say consensus, I don't mean everyone agrees. What I mean is Bitcoin level consensus, working within the framework of how Bitcoin gets changed. The BIP 110 soft fork is just working as intended. That's how Bitcoin gets consensus rule changes. You offer a soft, developers write the damn thing. If it's a soft fork, it's a restricting of the rules, and if enough people want to run it, they'll run it. And if the miners decide that enough of the network is running that protocol, that it makes them want to flip and signal for it as well, then they're free to do so. Or if they want to try to oppose it and not flip, then they can do that as well. And if they do win, then the opposition has the option to use a rejected soft fork it. If BIP 110 is not successful, I guess they would have the opportunity to hard fork. If the spammers use a rejected soft fork is unsuccessful, then the spammers could hard fork. So it's basically just a tennis match, right? Escalation dominance. You can do soft fork. You can soft fork the soft fork, and then if that's unsuccessful, you can hard fork the soft fork. That's basically how this goes. And as far as I can tell, that hard fork is the nuclear option, and everyone wants to paint the other side into the hard fork category, right? Everybody's like, oh, well, BIP 110, you just fork off, right? They're thinking, okay, if you should just make a Bcash chain. And then the BIP 110 people are like, no, screw you. Once we're successful and you don't like it, then you guys can fork off and go make a Bcash B-spam coin or something, whatever the hell we're going to call it. But that's how it works. You soft fork it. It either gets support or it don't. If it gets support, the other side can soft fork the soft fork, and whoever loses that battle can hard fork the soft fork. That's how it works. So we'll see. But again, just my 2 cents. What's up, Grit? How you been, man? What's going on, Buffalo? My daycare is $10 a minute. Yeah, that might work. That might work. But just a flat fee ain't gonna cut it. And the other thing is too is if the money that the spammers paid somehow went to the node runners, at least then you could say that the person paying the money was transacting with the person who was accepting the burden and the risk. But there's some rent-seeking behavior here, and I know the spammers object to be the parasite label, but there's some moral hazard here in that when you're exchanging value, if one person is mistaken about that value, at least they're consensually taking on that risk. But when the spammers transact with the miners and then offload the burden to a third party, aka the node runners, that's not a consensual free market transaction. So I don't really understand how the fee is the filter is supposed to work when, like, at that point you're asking the people who transact, so that's even another party. You're asking the people who transact in Bitcoin to outbid the spammers, right? The two people on the sides of the transactions are, you got the people who want to send and receive Bitcoin, and then you've got spammers who want to include arbitrary data in those transactions. So if you want the fees to be the filters, you're asking the people who are transacting in Bitcoin to outbid the spammers. And in either case, the miner gets the money. And so the miner doesn't care if the spammer outbids the transactor or the transactor outbids the spammer. The miner's good to go. He's getting his fees. So the incentive for the miner is just gimme, 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 right? So he's always going to vote gimme. More fees. The person who's transacting wants as low as fees as possible, and the spammer also technically wants the lowest fees as possible. And then you've got the referee, you've got the volunteer of the network, the node runner, who has to carry the burden of storing the transaction forever. So the fees of the filter doesn't really work. You can't just call it a free market when the users, the spammers, and the miners are transacting, and the node runners have the burden of storing it into perpetuity. I know the miners are being paid to secure the network, but you can secure the damn network without spam, right? I know they want to argue that whatever you can do is valid, but Bitcoin is perfectly sound money without spam. So the node runners don't need no damn spam in order for the miners to secure the network with proof of work. That's completely unnecessary. I know the miners want it because they want more fees, but again, this just kind of goes back to the proof of the block size war, regardless of whether we won or lost the damn thing. I'm starting to get a little bit unconvinced that the spam war was, or the block size war was even won. I guess I prefer the small blocks over the big blocks, but not forever. Like eventually we will need larger block size, I imagine, and probably need to make our peace with that at some point in the future. But regardless of whether the outcome was the best outcome, we did prove that the miners cannot just vote themselves any change to the Bitcoin protocol that they want. I think at that time there were plenty of people who thought, "Oh, the miners are in charge." But if the miners were in charge, they could just ban the halvings, right? We just why would they want half the reward? Screw it. We'll just go to 42 million Bitcoin, and we'll just do like a structured inflation, right? Maybe Bitcoin will go up a couple 100,000 Bitcoin every year or something, and we'll just have a fixed inflation rate. I'm sure the miners would love that. Uh, but they can't do that because the nodes won't let them. So we learned that lesson, and we're about to learn if it can be done without the devs, without the legacy devs. And so that'll be fun. Anyway, the process is working as intended. It's gonna suck, but embrace the suck, I suppose. What's up, Colonel? All right. So with that being said, strategy in Bitcoin is coming back to life a little bit. Actually, yeah, Bitcoin up from 59. Yeah, I guess we're so back, right? Bitcoin's up a grand. Um, so maybe the market is reacting favorably to, probably I guess gonna have to talk about this too, but I'm sure this will get talked about on True North on Wednesday. But they came out with some new guidance. I reviewed it all. My initial thoughts are that the, uh, I guess, kind of boosting the USD reserve is good for the prefs. I think STRC had bounced back $8 a share or something today. So that's all good news for everyone. I'm still not really trusting any rally until the conclusion of the spam war. But my plan that I've been talking about for probably at least a month was like, okay, I think we were kind of waiting for the real bull run to hit, and maybe that can happen after this. And I thought, oh, maybe we'll just moon and we'll just, to the moon, right? Because basically, looking at Bitcoin, actually, there's 2017 is not on here. Let's do, oh, you know what? Tony of Proof of Pain podcast sent me this. And so, like 2017, this was the conclusion of the block size war. And so I thought, oh, that was what was holding us back. And then we mooned, right? And we got, I think this was 17K. But I I did not look at this in the proper context. Like we had already bottomed in 2015, and we were halfway through the damn bull market at the conclusion of the block size wars. And so maybe the block size war was kind of holding us back and giving us this. I mean, this is not bad. From 2015, we're at like 250 a share or something. So we got like a 10x to here. And then in the conclusion of the block size war, like bam. But maybe the market was sniffing this out that, maybe the small blockers were going to win or something. I don't know. Because we even got this boost from 1,000 to like 3,000. And then we got the 5x. We got the move basically from 3 to 15 ish. So I thought, oh, maybe that'll happen, right? Maybe, well, actually, we're over here now. But maybe block size wars in August concludes. And in the next 6 months, we just get, bam, we're back to all time highs or something. But, and damn, like, I don't know if it was 6 months, 12 months ago, I was saying, oh, 4-year cycle is dead. And then it's like, oh, well, I don't know. Maybe it's kind of not dead. It looks kind of not dead. Looking at it like this. But if we're here, like this number, this was from 2025, so like we're down here now again, like here. So does it take another year to get back to all-time highs? Like, I don't know. I was considering just kind of like taking off my covered calls in August once we bottom and then waiting for the pump. And I and then like levering up, maybe even selling some shares and levering up, buying some long calls. The 1080s are gone. Like in 2028, you can't even get the highest strikes you can get are like the 345s. I was like, holy shit. I think January or December of 2027, somewhere along. Oh yeah, yeah, January 2028, or maybe December 2027. Anyway, somewhere in there you can get like the 700s. So those are like the new 1080s. And I thought, oh, maybe I'll grab some of those. But in 2028, you can't even get 700s. The only thing you can get is like the 345s. But now I'm kind of second guessing that, and I may be a little too eager. I may be um, in the casinos. It's called revenge betting, right? You win a bunch of money, or you just win it and lose it. You can either lose it or win it and lose it, and then you're like, you want to get back to even, or you want to get back to the number that you were up, and it happens in the stock market too, especially when you're holding a big winner like strategy, no, November 2024, and you just hodl that damn thing and lose 75% of your position because you were, too scared to take profits, or you applied the Bitcoin hodl strategy, the Bitcoin DCA hodl strategy, diamond hands. If you try to apply that to a stock, it doesn't necessarily translate very well. So I I still think we've we've got at least one more crash left in this this bear market. Let's just say fuck it and just say this was been a bear market. Even if we recover from that, we start climbing back up. Like, does it take a year? Does it take a year and a half? And we're just right back to what, 2028, 2027, 2028 for the uh, maybe even into 2029 if we get an extended bull. I think they said that the bulls have been, like, from the beginning to the end of the bull has been shorter as well. So I don't know if that means that the bear is getting longer, or we're just hitting them faster. But we got another halving in 2028 as well, so we can start talking about whether that's going to pump the price. So I think I may have been a little bit too anxious to YOLO. And what I may do instead is, instead of just YOLOing like a bunch of the way out of the money uh, attack the tail type calls, maybe do some more of the poor man's covered calls, the ones that lost me a shitload of money in 2025 and 2026, and just run that back, and then plow all the premium that I collect from the poor man's covered calls into more long positions. But that that running it back almost just kind of sounds like revenge betting too. So anyway, but that's a little bit more conservative than just YOLOing a bunch of whatever the new 1080s are. Buffalo says in 2022, I think the deep out of the money calls Jeff bought were 300s, now 30s. Yes, exactly. And he bought them like here, I think, right? Yeah. And so, looking at this, we're like here, right? The blues are the crashes down from the top of the bowl, and that kind of looks like what we've been doing. This is down and to the right. So somewhere in the next 6 months is, I mean, we're definitely, if you look at Sminston Width charts, or if you look at the simple moving average, the 200-day, was it the 4 year? The 4 year SMA? I can't remember. Jeff mentioned it on last Wednesday's episode. But if you look at the SMA, Bitcoin's in deep value. If you look at Sminston Width quantile, I think it's quantile regression, power law, uh, whatever the hell it's called. The band that we're in is deep value, and we don't stay here very long. Now, does it really matter if I catch 60 or if I catch 50? In the long run, no. But I'm already so irresponsibly long, I don't mind trying to time it exactly with my dry powder, because uh the majority of my portfolio is already dependent on Bitcoin. So for me personally, I guess it's a trade-off, right? Like, I can try to time it and get Bitcoin at 50, and if I mistime it and get Bitcoin at 70, that also doesn't matter. So if I try to hit the bottom and miss, and I get in at 60 or I get in at 70 because I fucked up and didn't and thought it was going to go to 50, that also doesn't matter. 5-10 years from now, when Bitcoin's 250,000, 500,000, whatever. I think Power Law says what million in 2036 or something, or is it 2039? Can't remember. Doesn't really matter. We know it's going up forever, Laura. But it's going to be a little bit fun and actually the safe play. All right. So for me personally, unless unless the prefs completely unwind, um, by me having some prefs, and if I just try to time this and hit it on the head, hit the nail on the head in the middle of August or whatever, beginning of August. If I also swing and miss, um, I'd rather swing and miss and overpay when Bitcoin runs to 70 than ape into it now and have to like be eyeballing my frickin' portfolio whether I'm going to hit a margin call because Bitcoin crashed to 50 and strategy crashed to 60 and the frickin' prefs crashed to $60 a share. Just God knows what can happen uh, with all of these prices if Bitcoin flashes to like 48 or something, right? Ahead of the spam war. Like, I'd rather avoid that pain and suffering and be a little late than be early trying to time this one. So everybody's situation is different, and I got to pay the bills off of this. So let's see. For me, core versus nuts isn't almost as unfathomable as Israel versus Palestine. Oh, is almost as, yeah, yeah. I was talking about that too. I wonder on a recent episode. I wonder if Bitcoin has helped Iran win the war, because as far as I know, I think they were saying that Iran's mining hash power went down when they were worried about getting their nuclear facilities bombed. And the inference was that they were using I guess their compute or something associated with their nuclear facilities to freaking mine Bitcoin or something. I don't know how exactly that would work. I would think that anything that's not ASICs would be super expensive to mine Bitcoin with. Um, oh, okay. You know what? I may be thinking about that wrong. So the nuclear power would be their source of extremely cheap energy, which would make Bitcoin mining profitable. Okay, so I misunderstood that. I don't know why that just occurred to me. It's not that their compute that they use with their nuclear facilities. Do they have nuclear reactors? Like, are they generating nuclear power, or are they just? I don't know. I don't know if Iran has nuclear energy, or they just burn a bunch of oil. Do they burn all the oil that they pump out of the ground? Anyway, regardless, somebody noticed that when we were about to bomb the shit out of their facilities, Iran's hash power went down. That was the claim. And so if Iran is utilizing Bitcoin to subsidize sanctions, and someone was even wondering if when the war started, if they were if Bitcoin started going down because they started becoming net spenders, right? If they didn't have any other cash on hand, maybe they had to start dipping into their cold storage and spending their Bitcoin stacks in order to fund, the war, or, just keeping their lights on or whatever. So would be kind of interesting if we find out 50 years from now that Bitcoin was critical to Iran being able to withstand the the world, the world's biggest military. That would be interesting. Can't wait to read that book. Let's see. The biggest voice within the Bitcoin space of my country says it's nothing to worry about. And Buffalo says I've been DCAing $261 a day in Bitcoin since February 6th. I hope we bottom soon. Since February 6th. Yeah. And that's a lot of 260 bucks a day. That's a lot of Satoshis. Yeah, I hope we bottom soon as well. All right, so with that being said, do I need to flip anything around? I really doubt it. Tesla's hanging around 408. So my cash secured put is finally starting to get some legs. 25 DTE, I could potentially roll this out. I've had it open for 20 days. I've kept almost half of the premium. So I could let this run a little bit longer. But anything under 25 is kind of in the sweet spot. I could let this go to 21 potentially, but let's just see. Well, I can only roll it out 2 weeks because the next one's not available. Actually, the bid ask spread is pretty good here. So I could get a $4 credit. Adding 2 weeks, that would be adding about $2 per week, which is only about adding about 0.5% a week. Whereas if I leave it alone, I've got 1,700 in extrinsic for 3 weeks. So I'm looking at over $500 a week in extrinsic if I do nothing. So adding 2 weeks to add, a couple $100 of extrinsic per week doesn't really get me excited. So I'm going to take a little bit more gamma risk and let this cook for a bit longer. See, this one's been on for a week. It's only, decayed 300 bucks. Nothing to do here. I gotta probably decide what to do with Tesla. I already hedged everything out. All my leverage, that is. I am bullish, but it's also so expensive. I mean, like if I had 500 shares of Tesla, I could be like, oh, well, I'll sell 200 and back the truck up for strategy. But in order for me to run covered calls, I really can't go less than 100 shares here. The only thing I can do, well, I could close this out and sell more puts in strategy or strive. That's possible. Maybe I'll think about that once this is close to 0 DTE. If there's not much, if this is going to be easy to close. Huh, does that make sense? If I close this? So if I close this completely, I would get an extra 12 grand of option buying power, which I could use to add strategy positions. So yeah, that's probably what I need to do. But I've got the next 3 weeks to do that. So if they don't dump the bottom out of the whole market, strategy holds firm, or excuse me, Tesla holds firm, but strategy dumps again, then I can close these positions and that'll free up a bit more buying power for strategy and strive. The SpaceX position is doing fine. It's only been on for a week and it's less than half of what I sold it for. So normally I would be drooling to add or to roll this out for a credit. But if I already looked at this, if I roll it out a week and I roll it up to the expected move, I'm going to get an extra 300 bucks, but also it's going to reduce my buying power by $1,000. This ratio isn't bad, actually. Getting 300 bucks and only having to put up $1,000 worth of option buying power in this roll doesn't seem like much, but in general, if I wanted to, no, not that one. If I wanted to just add a position now, it's over 10x. So I'd be getting paid 380 bucks, but I got to put up 5,500 in option buying power. So getting into the SpaceX position was kind of fun, but I'll probably be looking to exit that thing. I could actually do it now. I could just call this a fun experiment and say that I played, and then maybe kind of keep an eye on it and see if the margin efficiency gets better. But the margin efficiency is not the greatest. So maybe I'll just take, let me reshare without volume. I kind of liked having the diversification of having another ticker in here as well. But maybe the implied vol is wearing off of this. This is, let me just look at the weekly. So 1% of 160 if I wanted to sell the at-the-money cash secured puts. It's actually pretty good. So this is about 3% weekly premium of the underlying. But the margin efficiency is like pretty bad. So just being a premium whore, this is actually a pretty legit position. But yeah, I don't think I can justify using this much margin, or not margin, but option buying power for $200. Not when the margin efficiency here is, Jesus Christ, it's almost 1-to-1. I could get 10 of these for the same option buying power and get 10 times the premium. So yeah, I can't justify having that SpaceX position on. I pretty much can't justify having this one on either, now that I think about it. That would give me an extra 12 grand of option buying power, or really give me an extra 12 grand of cushion if the bottom does drop out of Bitcoin and strategy. Every dollar, it's not really showing margin here for some reason. Like the maintenance excess is normally the margin, but I believe the effective crypto buying power in a margin account is that same maintenance excess. It's SMA. I don't know. Maybe it's that number. I mean, the numbers are the same. I don't really know what the difference is. But I kind of don't want to pay this 2 grand. I mean, I know I sold it for 40, so I'd be keeping the difference. But this was me playing the roll until you're right game. And I don't know how much I collected in the first place. Like paying this 2 grand to close it might actually be be closing at a loss. So I'll just hodl that for another couple weeks till the extrinsic value is not worth keeping. And I might have to fast track this. I don't know if you can hear my dog. I'm gonna have to kill this freaking moth. It's pissing me off. Sorry, homie. Normally I would catch them and throw them out, but I don't know if you can hear him whining, but it's dinner. It's lunchtime. Dinner time from boy. All right, strategy. Getting wrecked on the 87s. I knew this was extremely possible. I've just been rolling down and rolling down and rolling down, and at some point the damn price bottoms and we find support. So this was kind of inevitable. When all of the extrinsic value is gone closer to Friday, then I'll roll these bad boys out and I'll play the roll until you're right game. I just don't believe any rallies until the spam war concludes. So at least this one's somewhat safe. What do I have that one against? Oh, that's against the synthetic. Okay, so plenty of time left on that one. Cypher. So Cypher's down, but not down so much that, you know, they're in any trouble or anything. So I'm not like super motivated to add any of these positions. These are extremely capital efficient as well. Yeah, like 1.5 times the credit is the option buying power reduction. So nothing to see there. I'll just wait for those to cook. Strive, looks like I just got a couple handfuls of cash secured puts that I keep adding. I keep adding 1 or 2 as the price crashes, right? I had the 14, then the 13, then the 12, then the 11. So, you know, holding tough at 11 so far, but if Bitcoin flashes, you know, Strive goes to 8 to 10 or whatever. So that'll be fun. Now, with that being said, I took 30 grand off the HELOC. I had already transferred in the first 10, I believe, and added some shares. Um, added some prefs, I mean. And I'm basically just waiting for these to recover and for Bitcoin to crash. Now, if Bitcoin crashes and the prefs crash, then this was kind of a waste of my time. Except I've been collecting my my daily dividends. So right now I'm kind of at a break even, right? So even now, if I break even, at least this did kind of serve its purpose, and I will have captured, whatever daily dividends I collected all along the way. Let me just look at the activity, transactions, money movement. Yeah, I got paid $7.80 Friday. So that's fun. All right, with that being said, I got 20 grand to spend. So Stretch is the biggest discount still. They've recovered what, $10 a share almost. So I'm just gonna keep going with SATA. And let's do 200 shares. Whoops. What am I doing here? Buy 200. Got 1,700 left. I should probably just leave it there. I haven't looked at my bills lately, but it is the 29th. So the mortgage is about to come out. I haven't looked at my credit card bill, but my fantasy football draft addiction isn't getting any better. So maybe I'll just leave that in cash for. Well, I could still put it in SATA and collect daily dividends, right? Can I get another 17 shares? Forget about it. All right, there we go. That's all she wrote. Go big or go home. Let's see. Buffalo bought some, but not nearly enough at 16K. Trying not to miss out this time. Yeah, yeah, and I feel like I'm kind of being a little bit of a greedy bitch by not backing up the truck at 60. Like even if it flashes to 48 or 40, like 60 is still extremely, extremely dippy. Colonel says, have you heard about Strategy's turnaround plans that may include share buybacks, common and prefs, and further Bitcoin selling? Maybe that's why the price reacted like it did today. Yeah, that's my assumption, is that the market liked um, their statement this morning. When I looked at it, I was like, okay, the USD reserve makes sense. Um, I didn't think the market would mind when they used it, but apparently they did. I think the other tools, the buybacks, are at least as valuable as, like, the threat of using them might just be as valuable, or maybe even more valuable than actually using them, because doing a stock buyback, it's like, it's price manipulation. um Now granted, if they did do pref buybacks or stock buybacks, or whatever, if they're selling a little bit of Bitcoin here and there to to participate in these levers, I suppose, pulling these levers over, short term, like maybe it does a little something to the price, but that's kind of all just manipulative. But over a long period of time, if these little tiny, I guess it's accretive dilution, but accretive, maybe it would be, instead of accretive dilution, it would be dilutive accretion. Anyway, over long periods of time, if it helps the BPS go up, over time, or it helps the price of the stock go up over time, it makes everybody happy. So to the extent that little small uses of these tools over time could aggregate into long-term confidence, I suppose. But um, as like the threat of death is worse than death itself, I think it just kind of puts the shorts on notice that, hey, if you short us too much, you know, we'll pump the price ourselves. We'll defend ourselves, basically, I think is what they're signaling. Whether they ever, and hopefully announcing your intentions to defend yourself, hopefully that would alleviate the need to actually do it. I think is where I was trying to go with that. Buffalo says selling puts on STRC were looking attractive. Not sure about today. I know some people did that. They bought they sold them, then sold the put, and then bought the, I don't know. I think Angry Buddha was doing something like that. And Josh Mandel posted something, some kind of financial alchemy with those. Let's see, 13%. Is that considered ripping the winds off the shorts? That's not exactly what I had in mind, but it's a start. I guess it's ripping my wings off this week, I suppose. Um, if that's what you're going for. I'm not too fussed about it though. For now. See, Colonel says the thing is, when it comes to Bitcoin, Sailor seems like a greedy bitch as well. But as you said, Bitcoin per share is the important metric for the market. Yeah, I think to a certain extent it is, because the theory is that it should drive the share price. Like an increase in BPS should theoretically drive the share price. So you want to focus on the thing that should give you the share price. But at the end of the day, if you bought at 200 a share, you want it to be 300 a share. If you bought at 500 a share at the top, you don't give a shit if BPS is increasing, but the stock is worth 80 or 90. Um, so I'm a little bit on the fence. Like, I guess BPS should be the target, and then over a 5-year period, number go up and share price should follow suit, or the thesis is broken. I guess maybe that makes sense to me. All right, the IRA, my 420 calls are getting threatened, so that's good news. Strategy, same. Strive, I got the 8 covered calls against 800 shares. I was pretty aggressive with these strikes too, but these are holding the line. I got the $12 strikes. I got the 1163 price. So we'll just wait for extrinsic value to do its thing. And then I've got the 2 cash secured puts. I've been playing the roll until you're right game, probably, I think, with these. But since this is an IRA and there's no margin efficiency anyway, I can easily just allow these to be assigned. That'll lower my cost basis probably to $16 a share. And then I can just add 2 more covered calls to that. So yeah, a whole lot of nothing in the IRA. What did I just do? I just minimize. Oh, so I could actually, I don't even have to have that on, which, oh no, because I need to click it in order to get to the trade buttons. All right. So this account's got like half the positions in it that it had because I took some money out and sent it to. Oh, that's what I got to do. I gotta call my dad. We need to. We need to add some. I was gonna have him sell like three $10 strike Strive cash secured puts. I gotta get with him. All right, I gotta hurry. Let's fast track this. All right, plenty of time and extrinsic value here. They have been on for 2 weeks though. I guess the price is going down. That's whatever. All right, Tesla strategy. All right, the Cypher cash secured puts. The price of this is coming down as well. I don't have enough maintenance excess to add any positions, so this is just I have to play the hold game here. Same thing with Strive. I've got 3 of the 15.5 cash secured puts. Plenty of extrinsic value though for 3.5 weeks. What is that? $27 per contract, $7 a week. That's only about 0.75% a week. Not terrible. But it really is to be expected when you sell a cash secured put and then it goes in the money. So that's fine. So they clipped the BIP 110 talk. True North posted the clip of just that. And one of the comments, whatever you do, don't ever read the comments. But some people were like, "Yeah, good job, thanks for covering it." Blah blah blah. One guy said something like, "Jeff's okay, Jeff's okay, but Nithu's or Soleil's brain dead. He lost all his money in 2026 or 2025, 2026." And I'm like, yeah, that's pretty reasonable. Pretty reasonable take. So doing a little bit of an after action report to see if that guy's being unfair. He's definitely not. So I started the 5K challenge in March of 2024. So I'm not going to be able to get this exactly right, but somewhere in here, yeah, like right there, I put 5 grand in this account, and I'm like, all right, let me do a 5K challenge. Now, of course, March or 2024 did 2024 things, and actually, this was like right after the pump, so my 5K quickly turned into 3. So that was a scary. Wasn't really worried because it was like, all right, bad timing. I started this challenge right after a pump, and Bitcoin and strategy and everything just going down during this time was kind of like, yeah, that's fair. By the the end of the year, okay, it was up to 8. Okay, that's cool. Back down to back down to 5. Actually, back down to 4 again. So 5K to 3 to 8 to 4. As long as over a long period of time it's up to the right, it's fine. But then November happened and I turned the 5K into 30. So that's cool. But apparently I know how to snatch defeat out of the jaws of victory because apparently I don't know how to take profits. And all of the leveraged positions that mooned at this point, I just kept them, right? I didn't like take all the leverage off and be like, oh, well, let me put half of this in cash or something, some dry powder, and wait for the price to come down. So the 30K turned into 20, turned into 15, turned into 10, turned into 20, and then all of 2025, 2026 just been a slow grind and pain and suffering. And look, 5K gang again. Got a little glimmer of hope earlier in May. Probably should have done that. Well, I kind of did a little bit. I did a little bit of sell in May and go away, but it wasn't as drastic as it probably should have been. So I dumped almost all of my leverage but this one was a mistake. I did keep one poor man's covered call. I think I paid about a grand for that. So this has gone down from a grand to 600. So lost 400 bucks on this. Now, of course, the covered call has been printing, but there's 100% chance that I've collected less premium than $400 on the covered calls. So maybe I've collected 100 bucks here, but with a poor man's covered call, when the price is going down, the short call cannot keep up with how badly the long call is going to perform. Poor man's covered calls only really print when the price is staying the same or going slightly up. If the price is going down, you're getting screwed. Period. Um, so I kept this on because I copy traded with my son, and he, we both had this one on together, and I was like, we'll just keep it. And I was dumb. It's not the end of the world though. I mean, it's still fine. But yeah, trying to turn this back into a 5K challenge again. Just going all the way around the merry-go-round. Complete 360. So yeah, that criticism was probably pretty fair. But it's funny because I simply just didn't take my own advice because the two most important things in an option portfolio is position size and liquidity. Liquidity was fine, but when the majority of your portfolio is leveraged, that's a problem. Like if you get lucky and win, you have to take that leverage off. And so, most of the pain and suffering in the value here is just me not taking my own advice and FOMOing in along with all the rest of the degens. But anyway, it's here, it's on the internet, it's forever. So hopefully this will be here for posterity, and maybe I'll learn something from my own mistakes. That'd be fun. That'd be kind of nice too. All right, with that being said, the $12 call is fine. $16 put. I mean, it has to be fine. There's nothing I can do about it. So maybe I'll just let this assign, and I'll have another 100 shares of Strive. 17.5 call. It's probably time to roll again down to the 16 strike. But I'll get with my son about that one. I think he's probably going to get assigned today anyway. So I might have to talk to my dad and him today. Only got about an hour left, so I got to get on that. Yeah, everything else is just same. Nothing to see here. Because you owned 19 shares of SATA, you've received a dividend of $1.03. All right, cool. Yay. All right, yeah, a whole lot of nothing in this account. Appreciate everybody for tuning in. Be good, y'all.